right, welcome everybody to the ETF Show. Yes, I know, very creative name. I came up with that myself. My name is Spencer Israel. I'm a producer here at Benzinga, and I don't like the stock. I love the ETF. That's how I roll, okay? We love ETFs, and that's the purpose of the show. We're just going to talk about ETFs. We're going to talk about ETFs I'm buying, I'm selling, ETFs you're buying, ETFs you're selling, ETFs you're holding for the long term, ETFs you're holding for the short term, new ETFs, fund flows, ETF news. Let me fix my mic. Hold on a second.
Sorry, guys. That's better. Okay. Welcome to the ETF Show. We got a lot to discuss. So just to recap, purpose of the show, talk about ETFs. Why? Why do we like ETFs? I'm glad you asked. Number one, ETFs are diversified. That's our favorite aspect of ETFs. ETFs are tax efficient compared to mutual funds. They have far fewer taxable events. ETFs have low fees compared to mutual funds. We love that as well. ETFs are usually actively traded like stocks, which makes it easier to get in and out of the fund. And also ETFs are, again, usually transparent, though there is a new wave of ETFs that are coming out that are non-transparent. We'll get to that in a future show. We love ETFs, and that's what we're doing here. We're just going to hang out and talk about ETFs. And usually bring on a guest. I hope to have one guest on per show. Today's guest is Bill Herman. He's the co-founder and managing partner at Wilshire Phoenix. They just launched a new gold fund like yesterday. We're going to talk about that fund, ticker WGLD, how it works, why it's different from other gold funds out there, and why you should maybe have a piece of gold or have a piece of your portfolio in gold. And a lot to get to on today's show. Hit that like button, guys. I do this all day, and yet I'm nervous, right? Because this is my thing, right? This is nobody else's thing. This is my thing. This is the ETF thing, and everyone's like, Spencer, do an ETF show. And I was like, okay, I'll do an ETF show. So here I am doing an ETF show. It's probably going to be a once a week thing for now, but depending on feedback, we will can potentially change that. All right, let's go into some news. There really is one major headline in ETF land this week, and that is the launch of a Bitcoin ETF. The first one in North America launched yesterday. Guys, this thing is on fire. It is the Purpose Bitcoin ETF. It only trades on the Toronto Stock Exchange in Canada. So U.S. investors got to open an account at a Canadian brokerage to get a piece. Ticker is BTCC. I'll pull up the chart there so you can see. This thing on day one was ridiculous, okay? 10 million shares of BTCC traded on day one. That's $165 million in dollar volume. It was the most traded ETF in Canada. Think about that. Imagine like a new fund, like a brand new fund, trading more than SPY or VU or the Qs, right? That kind of thing doesn't happen. Happened yesterday in Canada. Huge volume. You can see the chart there. This again goes back to yesterday because it's a one-day-old fund. Bitcoin is ripping. So let's talk about this fund a little bit and what it does. It like I said, is the first Bitcoin ETF in North America. The way it works like commodity for ETFs, basically, where you go and purchase shares of the fund, and then the fund manager then uses that money to go and buy the actual asset. In this case, Bitcoin. It's stored in cold storage, so you don't have to worry about that. And that's basically how the fund works. It does have a 1% management fee, which is, and maybe Bill can attest this, probably a little high for ETF land. But again, the first of its kind, right? We don't have any Bitcoin ETFs in North America. We have other ETF like structure products. We have GBTC in the US, which trades on the OTC markets. We have other cryptocurrency trusts as well from Grayscale, but we don't have any ETFs per se in the US. So we're going to be watching this one closely. Again, the ticker is BTCC. Going to be paying close attention to how this trades in Canada. It does trade. It is available in both Canadian and US dollars, which is interesting. But again, only trades in Canada for now. going to be paying close attention to the Purpose Bitcoin ETF. Okay, so here's how it's going to go. I want to get to our guest here, and after that, we'll do some ticker time. I'll take some questions from the chat, and I'll go over. We'll go over like the top best and worst performers of the week in terms of returns, and also in terms of flows as well, because we love fun flows. We love watching that. All right, let's go to our guest. Bill Herman is the co-founder and managing partner at Wilshire Phoenix. As I mentioned, they just launched a new ETF this week. Let's talk about it. Bill, good afternoon. Thanks for joining me.
Hey, thanks so much for having me.
All right, let's talk about this. You're launching a new gold ETF. WGLD is the ticker, as I mentioned. Bring it up right there, and I'll pull the chart up. Tell us about the purpose of this fund and what it does.
So it's like you said, it's a gold ETF, but sort of all the gold ETFs that exist are all basically the same. I think it comes down to sort of expense ratio. I think the only sort of innovation in the space, or even the in the gold space to date, has been where the gold is stored, or the types of bars that are held. I don't think that's really that meaningful for investors that just want sort of pure exposure to gold. Obviously, there's you can some of the vehicles allow for redemption, but a lot of retail wouldn't be sort of gated from that, because there's a certain amount that would need to be redeemed, and it would be, in certain products there's a couple $1 million worth. So basically the only similarity between our fund and the other gold funds is gold. And the way that we're different is that we use a thoughtful approach where we recognize that gold, like any other asset class, experiences drawdowns, volatility, and right now there's just no way for investors to sort of protect themselves against that. And if the fund also outperforms a standalone investment in gold, so while reducing the risk profile by lowering the volatility, and then also outperforming without the use of any futures, leverage, or derivatives, so we think this is a really good product for investors.
So the Wilshire W Shares Enhanced Gold ETF. Explain exactly how it works. So I was watching your video. Doesn't use futures, doesn't use derivatives, doesn't use swaps. So explain how the fund then goes and actually owns gold.
Sure. So I'm glad you brought up futures, swaps again. That it would have been a lot easier, right, for us to structure one like the traditional Wall Street model, but we gutted the Wall Street model out of it in order, just to protect investors. We all saw what happened on USO and other types of products that blow up. There's a lot of tracking error.
Contango, baby, name of the game.
Yeah, right. So we're using again, much more thoughtful approach. It's mathematically based. So it goes sort of. So I think when people hear the term volatility, they automatically, at least I kind of used to, with hearing about the term volatility, the first thing that comes into my mind is the VIX, right, or the fear index. But our strategy uses realized volatility, which is sort of up and down. So we capture both of those items in sort of a look back method. And if the volatility of gold is higher, we will lower the allocation to gold, and sort of vice versa. And then we have another sort of kicker, we'll call it, is that at the S&P 500, or just the equity markets in general, are quite correlated. So if the S&P 500 becomes quite volatile, our WGLD will then sort of bypass and then automatically increase its allocation to a full 100%.
So explain that. So you're saying that your gold fund is basically also tied in a way to the volatility of the S&P 500. So like what happened like last March, for example, last March indexes go crazy, markets going down. What would have happened to WGLD? You would have added more gold. Is that it?
So yeah, exactly. My lawyers tell me I can't talk about historical performance of the index.
Sure.
Stewart and Kissel, they're great, but they're also very, very cautious. But not going to take the advice of my counsel. I wish I could talk about the performance. Historical.
Well, not necessarily the performance, but just like what would the
as a general concept,
yeah.
That's what would have happened.
Okay.
That's right.
Okay. And it's a passive fund, right? So
exactly.
it's just
So
how often does it rebalance?
We're completely hands off.
So is there rebalancing at all, or is it just
yeah? So it rebalances on a monthly basis.
Okay. And you're right. You said that based on the performance of gold and the S&P 500. Let's talk about gold here. I mean, I just spent a few minutes talking about Bitcoin. It's sort of a weird segue there, but obviously Bitcoin is ripping here. Traditional commodities, traditional metals have been having a moment as well. What is the opportunity in gold right now? And I'm going to bring up some charts that I took from your site here in a second. But what is the opportunity for investors in gold? Why should they consider having a piece of their portfolio in gold?
Yeah, I think it's because of the especially because of the backdrop of the monetary and fiscal stimulus, with rates being at a all-time low, and just even performance as a standalone. It's outperformed. Gold as a standalone has outperformed. I see you brought one of our charts from our fact sheet up, and you can see the significant outperformance in market downtrends. But even if someone was to buy and hold from the year 2000 to sort of current, gold outperforms by I think 200 basis point, or 200%, or 200%, over that time, over the S&P 500. But the problem is that nobody could time anything like that, right? So what our fund is that if you want an allocation into gold, and we think that whether it's a straight allocation to gold using a buying physical gold or another ETF or our product, what have you. Obviously, we think our product is better because you don't have to sort of look at the market every day. It sort of increases and decreases its own allocation to gold for you. So it kind of removes some of the emotions out of trading as well, because one doesn't need to go into their E-Trade platform or what have you and buy more gold because the index and WGLD is buying it for you. So it creates a sort of a core portfolio asset for any investor.
Explain this chart to me. Maybe this is a really stupid question, but when on the right hand column it says gold, what exactly is that measuring? Is that measuring like spot gold, or is that measuring like futures? Like what? When someone tells me that like gold has outperformed the S&P, over basically it's sort of like I'm confused by that. Explain this to me.
We'll update it then. But I think it would be more. We kind of wrestle with it. It's measured by the LBMA PM gold price, which is the London fixing.
Okay.
And we have the disclosure at the bottom, which sort of says what gold is measured as. But we thought that a lot of people don't know what the LBMA PM
Fair
is.
enough.
So it's
Fair enough.
Kind of wrestling back and forth between, do we put gold in or LBMA PM? It's like, but I hear you.
Fair enough.
Yeah.
So, okay. you obviously believe in gold. You believe in the future of it as an asset, as an investment. What do you make of the? I mean, I just want to bring up the sort of the weird thing that happened between Reddit and it wasn't gold, but it was silver for a hot second. And for like a minute there, Reddit really took interest. The retail traders really took interest in silver. What do you make of that? Gold is these assets are historically like not like the sexiest. Gold is like a flight to safety, right? It's not like a sexy investment. I was really surprised to see the Reddit crowd flood into silver for a minute or so there. What do you think about that, and like maybe how it relates to gold as an investment? Knowing that, I guess it's liable to.
I think the narrative on the and I just want to disclose. I've been on Wall Street bets before it was cool to be on Wall Street bets.
Me too, man.
Yeah,
me too. Me too.
I didn't post that often, but
I never post.
It was, I thought it was a fun community, and I think it still can be. But yeah, I was sort of shocked with the kind of choosing silver as the next one. I think the narrative there was something that I think it was maybe one of the large investment banks had was short silver, and they I think they were trying to sort of squeeze the price up, and it looks like that was probably successful. But I think it's a mistake to say that that hedge funds and other large financial institutions aren't, and I know this factually, that they are front running Reddit.
Right.
So I mean, a lot of people don't have. I mean, when you see that movement start to happen on futures or in silver on that Sunday night before it happened, most people don't have access to the futures market, and the futures market was up 10% the night before. So that's institutions that are pumping it for just because they So I think the in terms of the regulatory stuff that's going on, I think people need to take. I think the regulators should take a hard look at the institutions that were involved, because a lot of I went back just out of curiosity to look at the trade size, trade count, and and even if the call options going,
it's sort of a giveaway.
Talking about $150 million spreads.
Sort of a giveaway.
Yeah, that's just not. There's no individual. Maybe it was Elon Musk.
Does he count as retail? I'm not quite sure what he counts as. So is crypto, is Bitcoin, is that a threat to gold as a safe haven asset? Or I don't know if you want to call it a safe haven as a diversifier.
I don't think it's a threat. I think it's a compliment. I mean, we're at Wilshire. We spent about a year and a half trying to launch with MYSE Arca a Bitcoin exchange traded product in the United States, and we spent a lot of time speaking to the SEC. We filed I think 6 amendments, 4 different. The New York Stock Exchange filed I think 4 different applications or amendments, but we were met with, as Miss Peirce put it in her dissent, sort of stubborn stodginess in the face of innovation, and sort of merit regulation. And if you applied these standards to basically any ETF that would be listed today, she, as her dissent noted, that she wonders how many ETFs would be currently listed for trading publicly. So it's that's what I really don't like to see, is being held to different standards, because merit regulations, just because one doesn't like an asset, that doesn't mean that investors shouldn't have choice, and that's a big problem. That we're not finished on the. We currently have another type of registration out there with the SEC on a different type of not an ETF, but we're ready to go when we think the time is right, and we're confident that we'll be the first ones to go, because by far our application was the best out of any of the other ones that were submitted.
It's a race, and as soon as they open the doors, whenever that day comes, could be this year.
I'll tell you what, it's not going to be this year.
No, you don't.
There's a lot of narrative that goes out on.
You know more than I. All right.
Because of but just from knowing, and being in the process. Yeah. So the SEC takes again, a different type of view on Bitcoin products. So Wilshire could file a S1 on a Bitcoin product today. It doesn't mean anything, right. Until you have an exchange attached to it. It doesn't get reviewed, and that's unlike any other product, right? So again, that's a big problem, and so the day count on it, even just by sort of looking at it from even if nothing else aside, even if Janet Yellen came out tomorrow and said, we love Bitcoin, everybody, but it's going to be a process on 2021, because it's going to go at least 240 days on the review, because that's the sort of review time. Right. So we're already into February. So just because of just math, we're not going to get there in 2021. And because also, even if an exchange kind of came on today to any of the applications, it would still be a sort of 30-day out from when it starts, because it needs to be posted to something called the Federal Register. So I would say it's next to impossible that a Bitcoin ETF would be approved in 2021.
I'm on with Bill Herman. He's the co-founder, managing partner at Wilshire Phoenix. Bill, you spent over a decade at BNY Mellon, and you left. You co-founded this firm. I want to end with this. Why do you like ETFs so much? Why start an ETF issuer?
Well, I mean, it's the ultimate innovation. I mean, I don't think it gets enough credit. I mean, it's the ultimate democratization of assets, of giving people access that otherwise wouldn't be able to. So in the case of WGLD, people would have access to the strategy, let alone able to buy, obtain physical gold. And now anyone could just type it in, and the same could be said for most other ETFs that exist. And that's why we just thought it's it's that first sort of, in the last 30 years, I think it's the most important innovation that's happened in the world of finance.
Totally agree. I guess you could open a futures account and go by but that's a pain. Nobody wants to do that. It's a pain in the ass.
Yeah, it's just, it's a lot hard. It's hard. I mean, listen,
you got to roll it over.
I've been a trader for 15 plus years.
Yeah.
And, just managing a few positions is tough, but to kind of replicate it and kind of rolling the contracts over and having to deal with them, it turns into a full-time job.
Yeah.
So.
All right, Wilshire Phoenix, their new ETF. I had the ticker up on the screen, WGLD, the only gold fund that actually rebalances based on the volatility in the market, both the gold market and the overall S&P 500. Bill Herman, thanks a lot for the time. You were my first guest. This is my first ETF show, and you were my first guest. So thanks a lot for bearing with me, and we'd love to have you back.
No, it was fun. Let's do this again.
All right, thanks a lot.
Thanks a lot.
All right. That was a ton of fun. I enjoyed that. Thanks to Bill Herman again. He's the co-founder and managing partner at Wilshire Phoenix. WGLD is the ticker on his new gold fund. Okay, so let's do some weekend review type things, right? Let's go to my favorite site, second favorite site after Benzinga. Second favorite site, etfdb.com. Let me share my screen so y'all can see. And let's look at some of the best and worst performers of the week. In terms of returns and in terms of fund flows. And then I'll get to some questions, but I want to stress this as well. I am not an expert, right? I don't know everything. All I know is that I freaking love ETFs. That's all that I know, right? So if you have a question, I will write it down. If I can answer it, I will. If I won't, I'm going to find someone who can and bring them on and have them answer it for you, okay? That is my promise to you. I've seen a few questions in here already. I will get to those in a second, but let's just do a quick week in review type of thing, so we can run through the winners and losers of the week. This is just a list of the best and worst performing ETFs of the last week. I've taken out leverage. We don't want leverage in here. That's not fair. Leverage is like steroids. We don't want to pay attention to leverage ETFs. They throw off the natural order of things. They're great for short-term trades, but for our purposes, we don't care about that. What jumps out to me here, man, this dry bulk shipping ETF, BDRY, has been like one of the top performing ETFs of the year. It is insane. I don't know why. If anyone in the chat knows why dry bulk shipping is all of a sudden on fire, please tell me, because I really don't know. I'm not lying. I really don't understand why. Like, if you look at the rest of this list, right? You get data sharing, right? Copper has been hot. Travel tech, technology, a lot of like growth industries, and then dry bulk shipping is at the top. I don't get it. Whatever. Can't fight the results. This has been the hottest stock of the week. I'm not saying go buy this ETF. Please do not take that away from this. I'm just saying let's look at overall market trends. ETFs allow us to do that. Other side of the trade, worst performers. Well, these are all NA. Why? Because they're new. They don't have enough history. Look, there's the one we just talked about. WGLD. Not enough price history yet. Let's go down a little bit. Okay. This is the biggest lesson I want to say for today, right? Shiny object syndrome. A lot of ETFs are shiny objects, right? TAN is a shiny object. PBW, clean energy, it's a shiny object. There are a lot of clean energy. Cannabis, shiny object. Just like stocks, ETFs that go up really fast will also go down really fast. Okay, so it shouldn't be a surprise really to see these ETFs as the worst performers of the week, right? Solar, clean energy, cannabis, 3D printing. A week ago, these all would have been on the other side as the best performers, right? Now they're the worst performers. That's par for the course. That's to be expected. You have to know that. You have to know if you're going to own TAN that you're in for some weeks like this, right? Go look at a weekly chart here. You know what? Let me pull up a weekly chart of TAN. I'm getting sidetracked here, but the TAN ETF got absolutely smoked a couple years ago. How do I let me just all right. Go on Benzinga Pro. You guys, can you see that? No, you can't. Let's get you up here so you can see that. We do have Zinger stock trivia in a second. I'll get to you guys, I promise. But where's my Benzinga Pro? There it is. TAN got smoked. Look at that. Shiny object, 2013, 2014. Look what happened in 2016, 2015, 2016. Absolutely crushed. It went from 30 down to like 15. It fell by half. Got smoked. This is what happens when you're in a shiny object ETF like TAN, right? So just par for the course. All right. Back to your ETFDB.com. So yeah, no real surprise to see a lot of these names on your leaderboard for worst performers of the week. They may well be the best performers in next week, but you got to know that this is par for the course. All right, fund flows. Just look at where the money is flowing into ETFs this week. No real surprise here. This is always going to be the same, pretty much at the top, right? VU, SPY, VTI. They're pretty much always going to be there. Those are like some of the largest ETFs on the market. Look at that. Look at that right there. ARK. ARKF, ARKK, ARKW. A lot of money flowing into these funds right now. Kathy Wood, ARK Invest, they're on fire. Okay. This is unusual. I mean, it's become normal in the last few months, but this is unusual for a smaller, and yes, ARK Invest is a smaller issuer compared to Vanguard, compared to State Street, compared to BlackRock, compared to Charles Schwab. To have the amount of fund flows that they've had in the last weeks and months is mind-blowing, right? So look at that. This is never going to change. VU, SPY, the Qs will be on here most weeks, but a lot of that. This is the biggest takeaway, right? A lot of money flowing into ARKF, ARKK, ARKW. What does that mean? It just means that people are buying. Remember, the price of an ETF is not determined by buyers and sellers. It's determined by what's in the basket, right? And how the basket fluctuates. So we measure sentiment. We measure buying and selling sentiment by flows. That's why we look at fund flows, right? So a lot of buyers flooding into ARK funds this week. Okay, I know there are some questions. I know. I don't have time to get to them. I'm going to write them down. I promise. But I'm out of time. This was the very first ETF show. So thank you all for sticking with me.